Namaskar and a very good evening, traders. Tuesday evening, 27th of December 2022. And like always, we are looking at the weekly daily 75-minute time frame combination. This is the Nifty near month futures in front of us. So let's try and understand what happened today. Number one, yesterday we had a bounce back. Today we have an extension of that bounce back. I got a few questions asked after yesterday's trade that whether this is a dead cat bounce or not. Well, my reply was we just had a dead cat bounce last week, which proved out to be a very good dead cat bounce. And in a structural fall, we don't get such often back to back. So the possibility of this being a dead cat bounce was very less. And so we have an extension. Now the next question that arises is, are we looking at further upside? Is this going to lead to further gains, or will it be over and we can see a drop? But before that, I would like to answer the question I raised yesterday in our yesterday's video, that do we have a short-term bottom in place or not? I would say yes. By the rules of fractals, we have a short-term bottom in place. Now, a short-term bottom in place does not necessarily mean that this level cannot be breached. It means that the market over the last two trading sessions has proven itself well enough that it wants to stabilize after the recent fall. Now we have to pay an extra attention to which way the price is heading. Now after this last 2 days bounce back on the daily time frame, of course the 75-minute time frame structure has started to improve. The short-term trend is on the verge of a reversal on the upside. The momentum of the short-term time frame has improved significantly. All that it needs to do, if you ask me honestly, is just not give back significant and just stay above the psychological 18K mark. I think that will give us or give the prices enough confidence towards 18,200 or maybe 300. So we are at that juncture where prices have proven itself to be better than just a one-day bounce back. Short-term time frame is improving. From a short-term point of view, we discussed these levels, 18,200 to 18,250 is what we should look at on the upside. And on the downside, by the way, if you take a closer look at the 75-minute time frame, you would see a huge outside bar which happened at the very first bar in today's trade. This was the candle that finished at 10:30 a.m. today morning. And I did share a thought about this in few places, that it's very likely to stay within this range, which it did for the next two bars. And any kind of a move beyond this range, either above the high or below the low, can lead to some follow-through movement. Well, it did move above the high towards the fag end of the day's trade. And so the expectation should be on the upside. And also, so this outside bar's low is going to be the bare minimum or immediate support to look for, which is at 17,969. You can use something like a 17,960. So 17,960 on the downside. If the index gives this back, closes somewhere here, then we might see further downsides. If that does not happen, of course, that will mean that 18K is respected. Then the probability of further upsides stays and improves, right? So you keep your trading bias on both the sides. Now you can start to look at longs as well. Bank Nifty's bounce back was equally good. In fact, if you take a look at the broader markets, the small and mid caps have done actually much better in today's trade in relation to the benchmark Nifty or the CNX 500. However, coming to Bank Nifty, a pretty good bounce back. 2-day bounce back, which is confirming a short-term low in place here. If you take a look at the 75-minute time frame, this bounce back is now at 42,900, very close to that 43,000 mark, which we discussed at resistances. This is where the Fibonacci 61.8% retracement comes into play. The momentum has improved significantly, which is a good news. And in this case also, there's a chance that the index will move towards that 43 and probably beyond 43,200. Now 43,200 is not a bad level, this zone. It aligns itself close to a structural support here, which was momentarily broken, and a lot of drama happened close to this area. So if prices finds itself back to this zone, I think it can give us some show of drama again. So 43,200 to 43,250, 300 is a very structural, strong resistance for the index. Keep an eye on SBI because that's the stock which is actually participating in this move. Well, if you see the way I have marked my sectors over here, most of them are blues, which means that the short-term trend is on the verge of a reversal on the upside, and the momentum on the short-term trend has improved. Once it improves and reverses, it will go all into green. And over here, the FMCG and pharma are where the short-term trends are down, but the short-term momentum is improving. So none of the sectors on the short-term time frame, now this is evaluated by the 75-minute time frame, these markings, none of them are in a emphatic strong uptrend or downtrend. Daily charts, however, for let's say CNX Pharma is in a strong downtrend. However, FMCG was the least, or I would say the only loser in today's trade, but it was completely the metals. Huge V, even sharper than a V, a recovery from the CNX metal index in today's trade, gaining over 4%. It was a pretty sharp sell-off, by the way, this one. In 3 days, it gave away a significant part, and so the follow-through bounce back that we noticed today was phenomenal. Now, I personally find it very difficult to catch these kind of moves, especially when the 75 or the lower time frames do not offer me any sign whatsoever in terms of a divergence in relation to price and momentum. Momentum can be looked into in various ways, but I didn't find anything. Sadly, these kind of moves, I find it very difficult to capture. Now, as a trader, what I find difficult to comprehend is which one to be trusted. There was a sharp sell-off. There is a sharp bounce back. If you take a look at the weekly charts, this is what you will see on the weekly time frame. Two very wide ranged candles. So I think a good thing would be to do is take a look at the lower time frame. I'm taking a look at the 75-minute time frame. I will look to evaluate those stocks which have moved into a strong uptrend on the 75-minute time frame. Wait, because most of the stocks would have gone up 4, 5, 6, 7%, and any kind of short-term correction should be held for a follow-through move. So that's what I'll be looking for. In that regards comes JSW Steel. Huge move. In fact, it took out, the move was so big that it took out its previous swing highs also. And so any kind of a correction from here on, close to the levels of 755, 752, these highs, can be looked upon as a buying opportunity for fresh highs. If that doesn't happen, then JSW Steel, Jindal Steel, and all these stocks which gave a phenomenal move today will dissipate. Unlikely, but if you take a look at Jindal Steel for sure, it's an extremely strong bounce back, strong uptrend on the weekly charts also. So I think that stocks like these, structures like these, Jindal Steel, one should keep on their radar and wait for a structural higher highs, higher lows kind of a formation to get formed. As of now, it's just given us a turn on a dime, extremely sharp V-shaped recovery. I would like to discuss one stock before I take a look at the global markets and wrap up, and that's Asian Paints. Extremely interesting candidate because on the weekly time frame 2 weeks back we had a sharp sell-off, and this was over 5% sell-off, which took the stock close to its previous supports. This last week we got a marginal breakdown from these zone. On the daily chart it looks like this, and today we have a turn on a dime move, a quick bounce back, which means very clearly that this was a trap for those all who shorted, who went short at this zone looking into a breakdown, are all extremely unhappy now. And thanks to this move of today, which was up almost 2%, the short-term time frame, the 75-minute time frame, has actually moved into an uptrend, and the momentum is also supportive. Which means that this guy, if this was a trap, which is more or less confirmed it was a trap, should inch further up, should ideally inch further up towards 31.50, 32 maybe. And so short-term traders can keep this stock on your 75-minute time frame and look for an opportunity. If it drops down tomorrow, because after this kind of a move, generally it should slow down. The zone of erstwhile highs like these, a tad below 3100 or 3100, is not a bad support to be looked into, where you can look for an opportunity to go long. So Asian Paints can be an interesting candidate. And if that happens, then this weekly chart will go for a toss. However, keeping this red candle in mind, respecting this red candle, the 50% of the red candle is around 3160. So use a resistance at 3160, 3155 to 3160. Right, now let's go to the global markets, and US markets are trading today and completely flat, and SGX is 33, 34 odd points negative. S&P 500 is completely flat. Dow Jones is marginally positive, inching up. European markets also marginally positive. Nothing fancy happening here. Crude, if you remember, we had done a detailed discussion in these areas wherein I had dropped these Fibonacci projections expecting 79.8 and 82.5. I think we are heading towards 82.5. The probability of 82.5 is very, very high at this juncture. So I hold on to this bullish view on crude. SGX is trading 34 points down. That's okay, because we had a sharp high momentum move in the last hour or so. And so tomorrow morning we can expect a little bit of slowdown, and then we will see which way we carry forward further, either on the upside, stay range bound, or see any kind of correction. Right? Okay then, take care of yourselves, trade well and trade wise.